In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest videos on my channel so that way you get the most up-to-date information. And before I go through the technical analysis portion, I'm going to go over the economic calendar. And for Thursday, August 1st, 2024, at 8:30 a.m., we have initial jobless claims, as well as U.S. productivity. And then at 9:45 a.m., we have S&P U.S. manufacturing PMI. And at 10 a.m., we have ISM manufacturing as well as construction spending. Now, in terms of the markets, they are just basically, essentially, for the most part, going up. For specifically the S&P and Nasdaq, we did have the FOMC interest rate decision and plus Jerome Powell speaking today. And what essentially happened is the market, before going into the decision making, seems like they're expecting 3 rate cuts this year, which is a complete flip from roughly about a month ago, I would say, where the market was expecting 1 or 0 rate cuts, at least 2 months ago, let's just say. But now the market surprisingly is expecting 2 to 3, which is kind of shocking because if you looked at the core PCE inflation numbers, which the Fed regards as highly more accurate, or they regard them as more accurate versus CPI and PPI numbers. And in terms of core PCE numbers, it was flat. Previously, it was 2.6%. The expected was to be 2.6%, and it came in at 2.6. But then if you look at the non-core, because the core PCE includes the energy costs or energy inflation numbers, and because it's so volatile, that's why the Fed mainly looks at the core. But if you look at the non-core, and again, this is for year-over-year PCE comparison, it came in at 2.6 previously, and expected was 2.5, and it came in as expected as 2.5. So hypothetically, inflation is lowering, hypothetically. And then in terms of June numbers, inflation for the U.S. is at 2.97%. The Fed wants to get to 2%. So arguably, you could say progress is being made, but it's not really being made. And to expect 2 to 3 rate cuts this year, it's kind of shocking, but the market's kind of expecting it. Now, the Fed didn't state that there's going to be a September rate cut, because the market is expecting a rate cut as soon as September. And during the press conference with Jerome Powell, he did not shut it down technically. He stated that it's not a guarantee. It's basically essentially not necessarily that they're stating there's going to be a rate cut in September, but there is a possibility and assessing the data and so on and so forth. But he's just saying we're not stating anything. We're just assessing the data as we go, but he didn't necessarily shut it down at the same time. So the market is kind of optimistic. Plus, on top of that, we see a few of the tech sector stocks jumping up. For example, we see NVIDIA right about here, just in one day jumped up 12.81%, which is pretty massive. This company is almost a $3 trillion company, and in one day jumped up basically 13%. And after hours, it's up quite a bit. I believe it's roughly about it shows right here, $121 when it closed at $117. We got Tesla up 4.24%. So pretty much heavy hitters, mega cap stocks are jumping up, essentially carrying the market up to the upside. So that is significant, and everything seems to be pulled. Now, in terms of the S&P and the Nasdaq, those are predominantly showing upside. They passed the downward trend resistance line that I showed earlier before and just pretty much destroyed it. And then at the same time, even though the S&P and Nasdaq are showing upside, for some reason the Dow Jones, it's showing a little bit of the upside. By the way, I'm basing this off the MACD lines. They indicate if we're in the bearish or bullish movement. And for some reason, the Dow Jones kind of seems like it wants to somewhat go down, but ultimately end up going up anyway. But for the S&P and Nasdaq, predominantly go up, / later on we will see potentially a pullback, as opposed to the Dow Jones. For some reason, Dow Jones showing later on it'll be going up further. But the S&P and Nasdaq, at one point, it seems like later on down the line it'll show a pullback. And to show you what I'm talking about, just quickly, so if you go to the 1-month chart for the S&P, it's showing that it's crossing over to a bullish movement. Actually, it already pretty much crossed over. And then the 3-month chart, these are more for the short term, is in the bullish movement. 6-month chart, bullish movement. So more for the shorter term, showing upside, right? But then for the 1-year chart, it technically could be crossing over to a bullish territory. It is in the bearish territory. The only reason why I wouldn't say I would commit to it still being in the bearish territory, or bullish commits for it to cross over to a bullish territory, is because it could dip down further later on. And then in the 5-year chart, we have it's in the bearish territory, right? So later down the line, longer term, more like potentially like a month from now, it could start dipping down again, right? Or maybe even the next 3 weeks, 2 weeks kind of thing. But essentially for the time being, for this week, it looks like it pretty much could be heading up. Nothing's guaranteed, obviously, but that seems to be the case. Now, if we look at the S&P 500 first, before I get to the rest of them, I'm going to be looking at SPY, which is an ETF for the S&P 500. And like I stated, broke through a bunch of resistance levels, broke through a downward trend resistance level. And then the next levels we're pretty much heading up to, because it's pretty much heading, pointing to up. Like there's nothing really expected to pull it down, right? For the most part. Yeah, we have things coming up in terms of economic calendar, especially on Friday. I would say the U.S. unemployment report, unemployment rate as well. Those things could be potentially good data points to pull maybe the market down if the numbers don't come in favorably. But essentially, we're heading up, and we closed at $550.81, and predominantly heading up to the range within this levels right about here, between 555 and some change to 556 and some change. And then ultimately, it seems like potentially getting back to all-time high range, which is essentially somewhere in the 563 and some change, and then the previous all-time high 564 and some change. So pretty much heading up to that zone. If we were to come back down, we potentially, I think, in terms of decent support, we could come down to 548 and some change, because we saw like a good amount of support right about here, good amount of support right about here, so 548 and some change, and we saw resistance levels at that level. But I think if we were to stabilize and come down, it'd be down to this level, which we saw a good amount of support consolidation and resistance, I guess, at the 542 and some change. Is it going to happen tomorrow? It seems like it's going to be a strong day, so I don't think necessarily that'll be the case. In terms of tomorrow, that's August 1st, Thursday, 2024. But yeah, so there's that. Now for the QQQ, which is a ETF for Nasdaq, and it's showing the same thing, going to the upside for the Nasdaq in terms of MACD lines, and it broke through the downward trend resistance line that was more prominent, it had more touch points, and it's heading up to the upward trend resistance line dating back since 2010. So you can see right about here, dating back since 2010, upward trend resistance line. Mind you, the market was still going up, it's just more encapsulated by the resistance level. Did break through since 2020 to 2022, then we got stuck underneath it again in as of recent of 2024, April, February, March timeframe, and then we did break through it, went up to the upside. I'm going to show right about here. So this was when it broke through the 2010 upward trend resistance line, went back up, and then came back underneath it, and now we're currently underneath it, right? Now the question is basically, are we going to pass it? We're pretty much getting close to it. Mind you, we closed at $471.07. After hours is showing $475.30, and to break through it, pretty much depending on when we cross through it, right, the longer we take, the higher the high will be to break through it. And essentially we're looking at $478 and some change. To be honest, it seems like it's going to be pretty easy to pass, personally, the way the momentum's going, but it could cause some issues. So pretty much it could hit the 478 and some change and start dipping down, maybe dip down to 473 and some change, because the reason why I'm stating that is because if you look horizontally right about here, maybe not the greatest line, I should adjust it, but you can see support, and support, 3 support touch points around that price point, give or take. So 473, 474, give or take, and then probably spike up to the moving average about 482 and some change, which coincidentally goes across the horizontal resistance level in terms of ballpark resistance right about here. But yeah, where the moving average is for the most part, 482 and some change, I don't think it's going to go higher unless it's a crazy day personally, but that is a possibility. Now, if we do come down in terms of support, potentially we could come back down as we go up to 478 to the 475 for support, and then like I stated as well, the 473, 474 with the horizontal, but then come down to this moving average right about here, which is the 465 and some change, which could potentially bounce off this downward trend resistance line. And what I visually mean by that is, for example, let's just say we go to the 478, then drop down to 475, a little bit consolidation, and then the 473, 474 with the horizontal support, like I stated earlier, and then come down to the downward trend resistance line and then bounce back up to the upside. And that downward trend resistance line is this one right here. And again, that price point, it depends on when it hits it, honestly. It could be the 466, it could be the 465, so on and so forth. But essentially, by the time it probably hits it, it's probably going to be 467, because at least the earlier part of the day, and then towards the end of the part of the day, you're looking at probably 466. Yeah, 466, maybe high 465. All right, can it go lower? Obviously can. Just the problem is the nature of tomorrow's trading day. It doesn't seem like we're going to see massive drops. If we did, I would expect it to pretty much slow down right about here, give or take. A little bit of resistance, a little bit of support, cross lines, yeah, breakouts and all stuff, but pretty much 460 and some change. I wouldn't see it going lower personally, just because, again, NVIDIA after hours is pretty much going up to the upside as well. Now for the Dow Jones, the narrative is a little bit different because it's essentially showing somewhat downside. Now we did end up hitting the higher level that I mentioned before, which was the 4,100 and 41,200, give or take. So we spiked up to it. We saw consolidation around that price point before, spiked up to it, et cetera, et cetera. Mind you, we closed at 40,842 points. And if we were to go up again, which could happen, the problem is it's not really showing it based off MACD lines. We would have a resistance at the 41,000 obviously, but then the 41,200, and then the previous all-time high of 41,376 points, give or take. Now to the downside, we could potentially have support at the 40,550 based off the moving average, and this upward trend resistance line that could act as support dating back since 2021. Right about here, we saw multiple touch points as resistance. Again, could act as support, and we're looking at support at about 40,361 points, and then coming down to this moving average right about here, which is about support at potentially 39,878 points, give or take. But we'll see. And then maybe you could expect maybe this holding off, but I don't. It's only one touch point, so I wouldn't really rely on it. But it's about 40,200 points, give or take. But I'm expecting the Dow Jones to consolidate within this range, which is basically about the 41,200 to give or take about 40,154 points, or maybe even the moving average 39,000 and essentially 889 points, give or take. But yeah, those are just ballpark numbers because the Dow Jones doesn't show too much movement for the most part, because if the market's all going up but the Dow Jones somewhat is trying to dip down, I doubt it'll fully dip down as much. That's the thing. And then plus the volatility index seems to be dropping somewhat. So if that's the case, the markets, in my opinion, will be going up because of the volatility indexes. Usually if it's rising, it's usually the markets are dropping, usually. But that's basically it for today's video. Hopefully you guys found it helpful. If you did, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And I do post these videos daily, so I highly encourage you to subscribe/follow if you want to be notified when I upload my next video. Thanks again for watching, and I'll see you guys in the next one. Take care. Peace.